Wow, I went into the SEC versus Coinbase lawsuit hearing today, January 17th, 2024, honestly expecting that the SEC would come prepared with an incredible argument for why the 12 tokens that they listed were a security. And Coinbase, I thought, was going to have a hard time defending against that. In this video, I'm going to give you my opinion in terms of who won this case. Right now, the motion at hand, the decision at hand for the judge is whether or not to let the case continue or to dismiss the case, to decide the case based on the pleadings thus far, or to throw the case out. The judge has indicated she is going to wait to make a decision, and she is not going to rule at the moment. So, without the judge ruling at the moment, we are going to go through some of the summaries and some of the big cases here, and we are going to come up with a conclusion. I want to be clear. I personally think the judge already has her decision. I just think she needs to structure her decision properly. I think she was sitting there listening, writing her decision. And so I think this case is already decided. I am 90% certain which way this case is going to go, though I could be totally wrong. I'm just a neutral person who looked in from the outside going, okay, I think the SEC is going to get rolled here, and let's just say I was surprised. So, what happened? Okay, here's the gist of what happened. I'm going to give you the summaries and we'll go into some more details. First, there were multiple cases where the judge argues, what makes crypto not its own thing? Why is it a security? And the SEC argues, well, there's this thing called the Howey test. Okay, the Howey test comes from a lawsuit, the SEC versus Howey Co. Okay, and there are 4 components to the Howey test. The Howey test makes it clear that something is a security when you provide an investment of money in a common enterprise with the expectation of profit to be derived from the efforts of others. But there are 2 parts of this that are a little complicating. One, there's the actual Howey test as to whether or not something is a security. And then you have to evaluate, well, is it a primary transaction we're talking about or a secondary transaction we're talking about? So I don't want to lose you. I want to make this as simple as possible. If Apple comes to you and says, yo, or let's do a different example. Elon Musk comes to you and says, I'm going to sell you shares of SpaceX, and I own SpaceX, right? And he is SpaceX. He's representing SpaceX in this case. So SpaceX goes directly to you and says, here are shares of SpaceX. Well, that is a primary issuer transaction, which is regulated by the SEC. Now, let's say you own Coinbase shares. Or SpaceX shares, and they're this laptop or whatever, right? This laptop represents those SpaceX shares. And I meet you in an alley somewhere, and you're like, yo, I want to sell you some SpaceX shares. You want my SpaceX shares? I'm like, sure. I'll give you this handgun for them, or these donuts, or money, whatever, right? And you're like, deal. And we shake hands, and we exchange the shares for some exchange of value. That could still be a security. This is still potentially a security. But that's considered a secondary transaction, which is an exempt transaction from the purview of the SEC. Like the SEC isn't in the alley policing you going, up, you need to follow the rules. That's really important because Coinbase is making this argument that, whoa. First of all, even if it is a security, we're just dealing in secondary transactions because different people's wallets are connecting. And different people's wallets connecting are not us representing an issuer like SpaceX and helping them sell shares. Different people's wallets connecting has nothing to do with us and the issuer. That's one of the arguments that Coinbase makes. The second argument that Coinbase makes is that the Howey test, and all of this is summarized on ehack.com, by the way. Go to ehack.com. It's totally free. I post a lot of my research there and commentary on there. But anyway, it's my website. I write it, okay? So anyway, and again, it's totally free. It's going to be free forever. So the Howey test has a lot to do with investment contracts. Now, how do we know that? Okay, well, that's really simple. So all you have to do is Google SEC versus Howey and Howey Co., the Howey company, okay? And when you Google that, you could find the actual case law. This is an old 1946 case law. And what's really important in this is the phrase investment contract. Upon the facts of the case, an offering of units in a citrus grove development coupled with a contract for cultivating that grove, was an investment contract within the meaning of the 1933 Securities Act. Okay, interesting. So that is where Coinbase's strongest argument comes from. Wait a second. Even if something is an investment of money into a common enterprise with the expectation of profit to be derived from the benefit of others, wait a second. Is there a stapled investment contract to that? For example, when you buy a share of Apple, you have your name put on a cap table somewhere. A transfer agent says, okay, Kevin Smith or whatever, you now own these shares of Apple. And as a result of that, you have potentially the right to vote, the right to dividends, the right in liquidation of the company in the event the company liquidates. You have the right to residual assets. You have the right to sue. You have a lot of rights that come with your ownership in that company. Coinbase makes the argument that the tokens that Coinbase threw in their lawsuit, which I have a screenshot, by the way, of the tokens that they threw in their lawsuit. I believe these are the 12 right here. Cardano, CHZ rather, Solana, Axie Infinity, Filecoin, Internet Community, Computer, I'm reading this too fast, Flow, Near Protocol, Polygon, Voyager Token, Sandbox Dash. Anyway, all this is at ehack.com. Anyway, point is, they're arguing that none of those come with an investment contract. Now, the SEC makes the argument that, wait a sec, there is a reasonable expectation of profit from investing in these coins or tokens or whatever you want to call them, right? And of course, that depends on the way they're structured, whether on Ethereum and so on. We don't have to get into all that. But the point is, the judge gave a really big tell right here. Here's a really big tell. I want you to see this one. The judge says, so if you find these are unregistered securities, wouldn't the asset purchasers have the right of rescission? And then the SEC goes, yeah, that's correct. Okay, that would imply that there's an investment contract. The judge trapped the SEC there. The judge literally smacked them upside the face with that one. She walked them into a landmine on that question. She's like, hey, if these are indeed securities, just what, think about it. I want you to think about this, okay? So I'm the judge. Hey, SEC, so these are securities, right? You think these are securities? Yeah, we think they're securities. Okay. So in that case, there would be a right of rescission, right? Because securities have a right of rescission, like the right to cancel your investment due to fraud or whatever, right? Yes, that's correct. Okay, that's what I thought. And then the judge is processing in her head, but these tokens don't have a right of rescission. See? The judge totally walked them into a landmine on that one. And they bit that one hook, line, and sinker. So that was a big deal. Remember, a rescission is a cancellation of the contract. Again, I even wrote that on eHack. This is a big deal. So the judge walked them into a landmine on that one. What else do we have? So the SEC argues, well, it's part of an enterprise. They've argued this over and over again. And they basically say, but look, the SEC's argument is, come on. It's a token. There are a group of developers. And when the developers with their biographies and their skill sets, when they make the metaverse better, or they make the underlying applications better, when they make the ecosystem better, then when that ecosystem gets better, the value of the token goes up. Okay, that may be true. But does that bestow contract rights? That's the big burn on the SEC. Now, the SEC should have, in their summary arguments, which I wrote on ehack.com, I wrote, the SEC should have made a very, very clear link between a token and the expectation of profit in a project from developers by linking the benefits with the asset. They needed to show that. In fact, I go as far as saying the SEC should make a very clear argument that if you own, 67% of a token ecosystem, maybe that gives you some control in a certain token ecosystem, right? Maybe that lets you manipulate it or change the voting or whatever, depending on which we're talking about. The SEC punted on that. They did not make that argument. That was probably their best argument. They didn't even make their best argument. Okay, no problem. So what happened when the judge was talking to Coinbase? Well, again, they made it very clear that there is no stapled contract to a token that says you have the right to liquidation, you have the right to dividends, you have the right to anything beyond your speculative interest in that token. And the judge frequently said, so it's kind of like if my friend owns a football jersey and I want to buy that fantasy football team because my friend owns that football jersey, am I investing in a security? And the judge is basically rhetorically arguing, just because I put money into something with the expectation of making money does not mean it's a security. Because if that were true, I wouldn't invest in trading cards, I wouldn't invest in Beanie Babies. Basically, all collectibles would be securities, all commodities would be securities. And the judge literally says, whoa, we're getting way too broad here about what a security potentially could be. So now Coinbase then goes on to say, look, like all we do is provide services. Yeah, we're an exchange. Yeah, we're a broker dealer. And yeah, we provide wallet services. But wallet services are just like an internet browser. Like when you go on Google Chrome and then you go interact with Chase, are we somehow responsible for what you do with Chase because we helped you get on the internet? You know, is Google Chrome responsible for what you do on the internet? No. So why would Coinbase be responsible for helping you have a way to connect? That they're an IT service is what Coinbase's argument. That seemed to be a strong argument that somewhat resonated with the judge. Now, the other thing that I thought was really interesting is the judge responds when, so Coinbase says, so, you know, we thought the SEC would present a scheme of contracts claim. This is a big one. A scheme of contract claim suggests that there is an implication that there is a contract. Even after Coinbase said, hey, Coinbase, we thought you, or SEC, even after Coinbase said that the SEC might present that argument, the SEC did not pick up that argument, by the way. And what was really interesting is it kind of went like this. Coinbase goes, we thought the SEC would present a scheme of contracts claim. Again, the implication that there's an investment contract. And the judge goes, you weren't presented that. And Coinbase goes, exactly. It's almost like the judge was like bantering with them. That came at roughly the same time that Coinbase is like, we have slides as well. Can we show you our slides? And the judge literally says, I'd love to see your slides. I'm sure somebody stayed up through the night making those slides. She was full serious. She's like, bro, how much Coinbase stock do you own, lady? Like, it was so obvious the whole time. She was totally like handing this case to Coinbase. Now, Coinbase did F up once. They had one really big F up. They covered for it, but they had a big F up, okay? The Coinbase F up was simple. So, the judge goes, hey, so when you invest in this contract, or rather this token, what happens if Solana, let's say, goes belly up? What happens if Solana goes bankrupt and I invested in Solana? Would I have any rights to sue the developers of Solana? And then Coinbase replies and says, well, the purchaser of Solana would have a claim in fraud. And no, that was the wrong answer. Because the judge is like, wait, but you just said there's no contract, so how could there be a fraud claim? The judge literally handed them an easy win right there, and they totally fumbled on that. And then the Coinbase guy retracts, and he's like, I'm sorry, I mean, no, it's not fraud, it's tort. That's different. Yeah, you're right, there's no contract. And they kind of got back on the same page. But it was really interesting, even through that total disaster, the judge was still trying to like help them along. So I think the judge kind of went into today with a decision already made, and they were looking for a stronger case from the SEC. Now, I did think it was weird that the judge is literally like, hey, I've got senators telling me, don't get involved in Coinbase, like stay out of this. And the judge is like, so maybe I should just stay in my lane. And I'm like, wait a second, you're literally saying that you're being politically what? Okay, whatever, maybe she's just being transparent, whatever. But then there was yet another argument, okay? And this was an interesting one. which was crazy because this is literally what the SEC used in their closing argument. I'm like, bro, why would you use your weakest claim in your closing argument, SEC? No. Like, I'm trying to look at this from a neutral point of view out of interest for like how law works and judges and the judicial system works. So the weakest argument the SEC had is literally what I'm about to say, which they ended up using in their summary argument. The SEC argued that Coinbase is an unregistered exchange and that the SEC has never approved a broker-dealer also operating an exchange. So think about that for a moment. There's the New York Stock Exchange and then there's Robinhood. They're separate, right? Coinbase is both. Coinbase is both the New York Stock Exchange and Robinhood. And the SEC is like, there's a conflict of interest between the broker-dealer also being an exchange. We've never approved one of those before. And you know what the judge says? Is that against the law? And the SEC responds, well, it's not illegal per se. We've just never approved an exchange that was also a broker-dealer. Bro, why would you use that argument in your closing argument? That was your worst argument. Oh, I mean, whatever. Like, it's good for the crypto community. I'm just saying, like, I was shocked by the SEC there. So the SEC also, and this was a really damning point, which is amazing for the crypto community, but this was a damning one, okay? The SEC goes, or the judge goes, well, I'm sure everybody buys tokens because they hope they appreciate in value, but that's why people buy trading cards or Beanie Babies as well. Are there tokens without an ecosystem? And the SEC goes, yes, Bitcoin. The judge says, is that because it's a replacement for fiat? No, there's no ecosystem behind it. If no one is inducing anything, you can't be buying a security, so to speak. And the judge says, basically that like, hey, so is Bitcoin a security? And the SEC is like, well, no. Okay, now, what did Coinbase do? Coinbase literally took that admission in this case, and at the end says, hey, Bitcoin actually isn't very different from all of these other tokens. There are support groups for Bitcoin, just like there are support groups for Cardano. What's the difference? And so Coinbase went like to the next level here, and they're like, hey, come to think about how much we're winning this case. What really is the difference between Bitcoin and all these other coins? After all, the SEC did say Bitcoin isn't a security, so maybe that's the argument. It was like, oh my gosh, it's just like putting the nails in the coffin. So anyway, that argument might not hold, but it doesn't need to, because well, let's put it this way. The strongest case that the SEC could have put forward, which would have been the connection that tokens are like a stock, the SEC did not make. Instead, Coinbase had the benefit of making the strongest argument, which is even if you're making an investment with the expectation of making a profit, there is no contract. And the Howey test, which is what this all relates to, has to do with the fact that there is an investment contract. Now, I will say, the judge did say, and this was a potential weak point, she said there could be a void in Coinbase's argument. The void in Coinbase's argument is that, wait a minute, does Howey actually only apply to investment contracts? Because remember, and this is something else that could be debated, okay? This could be debated. Remember, there are 4 components of the Howey test: an investment of money in a common enterprise with the expectation of profit to be derived from the benefit of others. Notice that none of those 4 things say investment contract, but all of those 4 components came from the Howey case, which defines that a security is any investment contract. So it's kind of like, can you take one part of the Howey case without taking the investment contract part? That could be debated. So if the judge, and I'll give you my opinion on this, if the judge wanted to side with the SEC, they could say, Howey test doesn't say investment contract, therefore SEC wins. That's all the judge would have to do. The Howey test nowhere says anything about there needing to be an investment contract. It's a security. But The problem with this, which is what the judge indicated, is, well, wait a minute. What if I invest in Beanie Babies? I expect to make money. I expect other people are going to be interested in Beanie Babies, which means I might benefit from the efforts of others. You know, maybe other people are going to burn Beanie Babies. There'll be less Beanie Babies out, kind of like people burn tokens. There'll be less Beanie Babies outstanding, and then the value of my Beanie Baby will go up, right? And then you could argue, well, is that a common enterprise? Like, you could make all of these different arguments, right? But the judge is really concerned that if she sides with the SEC, she encompasses commodities and Beanie Babies and trading cards all under the purview of a security. When the reality that the judge seems to point out is Coinbase is facilitating services. Coinbase is providing IT services. Coinbase is primarily operating in secondary transactions, which have no jurisdiction with the SEC. They're exempt transactions. And you can't look at the Howey test with just these 4 components. You must also consider the investment contract aspect. And since there is no investment contract in relation to these tokens that people are trading, then these tokens can't be a security. The reason for that is this idea that, well, like, who gets the contract? Can a blockchain address be a party to a contract? And I'm not talking smart contracts here. I'm talking about legal contract in law. Well, a wallet address isn't a legal entity, and it's not a person, it's an address. You know, it's like a P.O. box. It's like saying my P.O. box has the right to sue somebody. Well, no, it doesn't. So do those tokens, which have ownership in random wallet addresses, like, who's the individual that actually owns those wallet addresses who would get contractual rights? So in other words, you can't really have a contract if you don't know who the other person is. But by virtue of the blockchain, most of the time you have no freaking idea who the other person is. So if you don't know who the other person is, how could you have a contract with the other person? Which means there can't be an investment contract. And if there can't be an investment contract, then the Howey test can't qualify, which means these are not securities. So now I'm going to give my bottom line opinion on this. My bottom line opinion on all of this, I think with a 90% degree of certainty, Coinbase wins this. I went into this thinking nearly the opposite. I've been convinced, after listening to this for 4.5 hours, the SEC did not make a very convincing argument. The judge seemed married to Coinbase. And quite frankly, the arguments over at Coinbase, despite their stumbles, one stumble, were strong. I think they made a very good point. So that's my opinion. You know, don't sue me, bro. I'm literally a dude with a Lego cup and the skull Lego cup over here who wants to drink coffee and go to the bathroom because it's been like 5 hours. So if you like this kind of content, make sure to subscribe to the channel. Check out ehack.com and I'll continuously bring you news over there. The next thing I'm going to be posting over there is going to be the beige book whenever I get around to dealing with the beige book. Thank you so much for watching. Really appreciate y'all, and we'll all see you in the next one. Goodbye and good luck.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.
Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate an actively managed ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker.